Teach you an infinite amount of ways to beat a financial advisor at the bank or financial institution. Basically, anyone who manages money for a fee. That's the whole point of InvestCan. It's to put a quant in your pocket, a financial advisor in your pocket. So there's a new feature on InvestCan that allows you to adjust the algorithm. InvestCan can mimic exactly what the banks are doing, or you can use the algorithm to the full potential and find out what a lot of math is figuring out to be the best portfolio. Or you can build a portfolio anywhere in between. So the whole point of InvestCan is to help you build a portfolio throughout your whole life. Right now, a 60-year-old retiring at 65, living to 95, they're going to have a 60-40 portfolio. All you have to do is click the InvestCan button. So here we have a 60-40 portfolio with the full MGM capabilities. Now let's build a portfolio like the banks. All you're going to want to do is slide this bar at the top of the screen. If you pull it all the way to the left, this will build a portfolio just like the banks. So you can see how a bank builds a portfolio. They're avoiding the global and US sector. These asset classes match the ETFs down below, and they're avoiding commodities and money market. So this is what a portfolio looks like when you put it in the middle. Alright, so let's test out these claims. How do you beat every financial advisor? So we're building a 60-40 portfolio. So we're going to compare it against ZBAL and XBAL. ZBAL with a shorter time horizon and XBAL for a longer time horizon. So when we go into Portfolio Visualizer, we can look back to February of 2021. ZBAL's in the first portfolio, the bank strategic asset allocations in the second portfolio, and the MGN tactical asset allocation is in the third portfolio. We're just going to test the limits, and you can build anything in between. So $1 million portfolio with ZBAL grew to 1.3 million, the bank mix got 1.7 million, and the MGN portfolio grew to 1.8 million. In this time period, the S&P 500 grew to 1.9 million. This is a 100% equity portfolio, and the MGN portfolio was keeping pace. Comparing just the portfolios, the MGN mix had the best compound annual growth rate, the best year. The bank mix lost the least in the worst year, had the lowest max drawdown, but the MGN mix ultimately had the best Sharpe ratio. So it's also interesting to note that the bank and the MGN mix both had a better Sharpe ratio than the S&P 500. Now we're going to look further back with XBAL. I had to swap out a couple ETFs with similar investments, and PFL seems to be the youngest ETF of this mix. Building a similar portfolio with a longer time horizon, we're going to use VEE, ZDM, FHQ, RUD, and CGL.C. After 10 years of great stock market returns, XBAL grew to 2 million, the bank mix grew to 2.2 million, and the MGN portfolio grew to 2.7 million. The MGN mix had the best returns out of the portfolios, and even had a Sharpe ratio better than the S&P 500. So you can see these custom mixes are just destroying the asset allocation products, and these are beating financial advisors. This is how you do it on your own. But what do you do with this $1 million portfolio now? So you're going to have to create a withdrawal stream, and let's use RetireCan to do it. We're going to bump the age up a little bit to 65 years old, and this individual is going to be retiring this year and living to 95. We're going to have that entire $1 million portfolio in an RRSP, and we're going to use the XBAL return 7.47 over the last 10 years to help us create a withdrawal stream. Now all you have to do is click whatever province you live in. So creating an income stream for 30 years, adjusting 2.1% for inflation, you can withdraw $5,600 out of your RRSP every month this year. If you want to pull all your money out in January, just click the calendar. You can pull about $68,000 out in January and just get it all done in one transaction. If we only need to create a retirement income stream for 25 years, your life expectancy is about 90 at this point, just change the numbers. A shorter time horizon allows you to withdraw more money. We just don't need 5 years of income. So now you can pull out $6,100 a month. So let's test out the withdrawal stream. In Portfolio Visualizer, you're going to want to jump over to the settings. On the cash flow drop down, we're going to click withdraw fixed amount. We're going to type $6,100 in the withdrawal amount. We're going to keep inflation adjusted, and we're going to make these withdrawals monthly. Since we're withdrawing monthly, we can rebalance monthly as well. And we're going to keep the dividends reinvested. Almost at the halfway point of this person's retirement and withdrawing that $6,100 adjusted for inflation for the last 10 years, XBAL is left with $762,000, the bank mix still had $932,000, and the MGN mix still had $1.2 million. You actually grew your money withdrawing for the last 10 years. So hopefully you found out investing isn't hard, you just need a couple tools to help guide you throughout your retirement.